knowledge and get real estate. So make sure that you're joined in. The link is on the other stories we have. All right. All right, let's do this, Dan. Let's do this.
How are you doing, Alex? How's it going?
Hey, what's up?
What's up, Alex? How's it going?
Going well. About to take my finals next week.
Oh, nice, man. Nice.
Yeah.
We're about to get into this, man. It's gonna be really good.
All right.
All right.
Hey,
I'm gonna tag you on this post, Dan. If you want to quickly repost or something, then we could get straight in. I think people should probably be joining like in and out while we're going.
okay, good deal. Well, hey, my name is Dan Park. I'm from Nexa Mortgage, and I've been in the industry since 2010. So I've been in it a long time. I've seen all the ups and downs in the industry. So if you have any questions, Nexa Mortgage is a broker and we do it all. Here we have Kusto. Kusto, you want to introduce yourself?
Yes, so my name's Inas Kustovic. I go by Kusto, and I've been in real estate now for 3 years total. So I'm going to get my broker's license. Like Dan here is a broker in the mortgage industry. So we're gonna get this going and spread that knowledge together. You know, real estate is really a team experience always. So without Dan, we couldn't really do much of the real estate side that we do.
Okay, let's go.
Let's go.
All right, so welcome to the virtual home buying seminar. And you know, like Kusto said, he's trying to become a broker. I'm a mortgage broker. So what a mortgage broker means that I have over 200 different companies that I can use. We're local independent mortgage brokers. We don't work for the banks. We have faster turn times, and it actually gives you less stress because we can close faster. We can get people approved quicker and with different experiences also compared to a traditional bank. So we're a one-stop shop. And Kusto, tell me a little bit the difference between like you and another agent.
Yeah, so there's a lot of big differences, man. I'm a true battler. So the way that I'm with my clients and the communication is on a daily basis. You know, whenever I'm working with somebody, I'm always with them 24/7, showing them the process, explaining up front everything that they should expect, even the worst case scenarios. So, you know, put me in a field with another agent and I could truly show the differences in that.
Yeah, and it's important to have a good agent because they can show you all the comparables, but they can also give you little insights that they have over the years of experience they have.
Yeah, exactly.
So, you know, some of you are paying rent and, you know, you might think that I can't have a mortgage. I can't buy a property because I don't have enough money. I don't have enough down payment, but actually there's a way to get some properties with little down payment or little cash. But that's something that you would have to talk to us individually or later when we have the question section. So here are the 7 steps to buying a home. Kusto, you want to talk about the first one?
Yeah, so the first step is finding out how much you could get approved for. Now, all the time we've had clients to where they contact us and reach out and they always say, oh man, well, I'd like to go look at homes in the 500,000 price range, or I like the styles of 400,000, you know, that's what I could spend. Now, if I was to go out and show them the 400,000 properties, they would maybe not qualify for something that of that price range. So it's always good to have a basis start point, what you could qualify for, so that you don't fall in love with something that's out of your price budget. And also you could know from a standpoint of saving time, where to go and what to look for.
Yeah, it's always important to just know what your expectations are. So the next is finding a home. So you go out with Kusto and you find a perfect property. Kusto, what's a thing that you like to do to help your clients?
Yeah, so one of the major things I like to incorporate on finding the home is I could actually go, just like they go and search on Zillow and all these other realtor websites, I could actually pull up a whole map and actually pinpoint exactly where they're looking for. So that way, every single home that I email them on a daily basis, it'll be showing up exactly what they want, bedroom count, and also in all the areas that matches their criteria.
That's awesome. So get your offer accepted. Now, a lot of people don't understand this, but a lot of this process is negotiation. You guys might have the same numbers as somebody else, but somebody like Kusto can actually do the negotiation for you and make your offer more appealing. Kusto, can you tell us more about that?
Yeah, so a lot of people think it's, mainly in the pricing, or they're not too sure how to actually get into the home and get their offer accepted. So you're actually in a competition. Once you actually write up the offer, get it signed, you are still hoping that you're the one that's accepted. And that's why we partner up with Dan. Dan is the mortgage broker. He's talking with 200 lenders, 200 different people, how to get the best other circumstances in the offer, like contingency days, due diligence, because it's not always inside the price that gets you to win. Dan, could you tag a little bit along on, what is the biggest challenge on getting your offer actually accepted, like that you've seen?
The biggest challenge is how strong your offer is. So with finance contingency, appraisal contingency, due diligence days, sometimes earnest money, how much earnest money you put down. The more earnest money you put down, the more attractive your offer looks. So it's really important to talk to your realtor and have a game plan, because you might go out there and say, hey, I want a house, but you don't really know. And there's a reason why you get a realtor versus doing it yourself. One of the biggest things is negotiation. And also, what people don't realize, you don't have to pay the realtor. You don't pay the realtor at all, actually. Kusto, who pays the realtor at the end of this process?
The seller always pays the realtor's fees.
So Kusto doesn't get a dime from you. He actually spends his time, and he will get money at closing from your seller. So there's no risk to you to have a realtor. So that's why it's really important to have a realtor on your side.
Yeah, it's only upside. There's no negatives to having one, especially the representation on new constructions, even though they have agents available as well.
Yeah, and if you get a new construction and you're not using a realtor, you're doing yourself a disservice, because a realtor can negotiate better for you. And if you don't, the new construction people just take that 3% for themselves, and they don't apply it to you. They don't give you any more discounts. So there's no reason not to use a realtor.
Yep, exactly, Dan.
Yeah, Kusto, tell us a little bit about this slide over here.
Okay, perfect. So this is a slide that I actually wanted Dan to throw in, and this is actually just showing what we could do if we work with a professional like Dan himself. Now, what this shows is, as a duty of a realtor, I'm here to represent you and be in your best interest. So this all starts with an earnest money deposit. Working with Dan, you could tell him where this money is going, either closing costs or your actual down payment on the principal of the house. But what you have here is $2,500, just for an example. We have, and all of this that you see after the $2,500, it is all ways to protect yourself as a buyer if you are actually going to terminate this deal. So once you actually sign the paperwork and the seller accepts it, we're all on the way to go. You still have an inspection period, appraisal, and finance timeline that you have to meet to actually get to the house and finish the process. Now, this $2,500, like I said, goes to Dan, down payment, etc. Now, everything else protects yourself. So you have 5 days from the beginning. Due diligence, what it is 5 days of you get to back out for any reason at all if you want to terminate this deal, and the money all comes back to you. Same with the finance and appraisal. Now, Dan, being in a seller's shoes, let's say you're my seller, Dan. Now, if I'm going to send you these two offers, let's say they're two different. You obviously want the one that says 0-day finance, because what I'm telling you on this 10-day is, Dan, if I am not sure if my financing will go through. So I'll give you 10 days to negotiate you or be able to terminate keeping my earnest money. But once you're pre-qualified with Dan, he tells you you're good to go. We waive that off with zero, and you are good to go with just the due diligence and appraisal showing the seller you're serious. You win over competition, and your earnest money is still protected within that inspection period. Is there anything you think I missed out on, Dan? And how would you attack this slide here?
Quick question. So what if I say, hey, I want a longer due diligence?
Yeah, and that is possible as well, Dan. In each scenario, we always find the house and we like to talk and make a little bit of a rapport with the seller and with the seller's agent. If we do figure out that there is more competition, I work with very close inspectors that could get this all done within the 5 day.
Wow, okay. So you can get an inspection done in 5 days.
I could do an inspection in 24 hours, Dan. We could get it going.
That now guys, that's very rare. Somebody can do it within 24 hours. So another reason why that you should consider using Custo. And one of the things are we can also get that finance contingency within those 5 days. That's why you don't need any days for finance contingency. We can get you approved initial approval within those 5 days. So, and then we can get the appraisal done within 7 days. So that's why it gives you 10 days, a little bit of cushion. So just in case, I don't know, if there's a big rainstorm or something happens, you still need to do the appraisal. You have those extra days to get it done.
Yep. And in your words, really quick, Dan, would you mind just explaining, from your financial side as a loan officer, what is a financing contingency? Why is it important that we waive it? Because you're the finance expert on the side of things.
Sure. So finance contingency basically means that you have X amount of days to get financing, to get initial approval for your loan. So when the initial approval is, they look at your income, they look at your bank statements, they look at the different things that you own and make sure that you are eligible to buy this property, at least initially. So all the initial checks are done and they say, hey, you know what, this guy looks good, we approve him. And then further along the process, we might need more documentation to show that, those things are true. But after the initial approval, you're a very strong candidate to buy that house.
Yep, perfect. And showing on this, you could do that within the first couple of days or maybe even before we send in the offer, correct?
So there's a thing called a TBD approval where you can actually get all of that done, all of the first steps done in the beginning before you even go out looking for houses. And you can put that in with your offer to make your offer actually stronger and better.
Wow, yeah, that's amazing. That's amazing, Dan. And that helps agents as well a lot, being able to explain this to their clients.
So many different states, they call it escrow. So what escrow means is when you put the earnest money deposit down, you're in escrow. So you have that money that is there to show that you are serious about that property. So usually it's about 1%. Sometimes people make it a little bit larger. So Custo, how large have you seen and how little have you seen?
So I've seen as little get accepted as $1,000, but people that really want to jump on the boat and get active with the seller, show that they're serious, they put 20, 25,000 down. And
wow,
those people really get serious, especially back a year ago, a year and a half ago, when the market was hot, there was super large amounts of earnest money with low due diligence going around.
So what that means is if you put that money down, the earnest money down, it can be used towards your down payment or your closing. But that money basically shows that you are really interested in that property. And that money can be waived to the seller if you don't go through on your promises after due diligence, after finance contingency, and after appraisal contingency. So it's very important that even though you have that money there, that you have to think about the amount of money you want to put down.
Yep. Yeah, and if you could please go to the last slide really quick, just so people could get a little bit of a visual. So what we're talking about here for the opening the escrow is this top number is what you're actually putting as your down payment. And the other days is the way that you protect yourself in case you want to terminate the deal. If you find something bad on inspection or don't want to move forward, you are protecting your full deposit from 5 to 10,000, you know, the 1% Dan was mentioning. After these days are up, after 10 days, you are no longer protected if you did terminate the deal, which could, you know, consequently, you could lose your earnest money to the seller, Dan. And we've seen that before, you know, happen in some scenarios where people don't choose the right loan officer, the right realtor to actually explain this up front to them.
Yeah, and people right now, you know, they get so caught up in, hey, I want to get that house, I want to win the bid, that they don't think about the full consequences of that. And that's what Kusta and I are here for you.
Yep. Okay, perfect. Step 5, let's do it.
So we talked about the inspection, and Kusta knows somebody who can get it done within 24 hours. So why is inspection important, Kusta?
Yeah, so it's really important to actually know what you're getting yourself into. A lot of people, you know, I'm not a home expert, you know, inspection wise, neither are you or anyone's parents. You know, we always have that joke as a realtor, your dad is not a home inspector, you know, even though we would all love to have one. It's important really to get the inspection so that you know what's behind the walls, what's actually the hidden defects inside the home. And then that way you also, during your due diligence period, you get to negotiate the seller if you do find something. So for example, I just had one closing over in Dallas, Georgia, and it's inspection back and forth about the roof leaking. Now the seller gave us a full new roof, put it on there, and it's all because we got it inspected and we were able to negotiate something that would have cost my buyer $15,000 up front.
15,000, wow.
Yeah.
How much was the property worth?
It was 350,000.
15,000, that's what, 5% of the property. So that's a large savings.
Yeah, definitely. Definitely. And we had a quick question here. An average inspection cost. Now it all depends, you know, on the square footage, but usually it rounds about $400 to $500. And then I'll quickly tag in here. So a lot of people have to spend this money up front, and you're actually protected if you were to terminate during due diligence. But all you would lose is that $400 to $500 on inspection, rather than getting yourself into a mess that could cost you 20 to 40,000 in expenses to fix.
Yeah, I mean, there's a lot of money that can be saved with an appraisal and with also an inspection. So another reason why you want to have an appraisal, sometimes the appraisal can be waived. So what that means is we run you through a underwriting system, and if you put 20% down, it's about 50-50 chance that you actually need an appraisal. So in that 50% of chance that you don't need appraisal, you might want to get an appraisal done just to see that this home value is good and that you like it compared to the other neighbors' properties, but it's not necessary for the bank's approval. So it just depends on what you want to do. And the average appraisal cost is anywhere from $450 to $750. Just depends on how big the house is. But I would say most of the time it's about $550. It's in that range. All right, so sign final docs and close with the loan officer.
Yeah, so Dan, what are your main documents that you're actually sending out, you know, for this whole process? You know, I'm always going to a closing and I'm seeing a packet about this many papers, you know, with the lawyers.
So most of those documents are basically when you sign and everybody explains what this is, what that is, it's a rider, it's this and that. Those documents are basically saying that I'm gonna pay, if I don't pay, they're gonna foreclose on my property. So you better pay. And it's also written with prepayment penalties, you know, like if I pay back sooner, will I get penalized? And with a conventional loan, FHA loan, VA loan, USDA loan, there are no prepayment penalties. So the next day, if you want to pay off all the $400,000 on that mortgage, you can do it without any penalty. So people ask that all the time. Hey, will I get penalized if I pay everything early in a year or two? You won't. So a lot of those documents are either giving you information about the state or about your loan or about what's going to happen if you don't pay. So that's what most of those documents say.
And Dan, you know my favorite document out of all of those that I always point out to my client, I always go to the amortization of the interest rate document. I also show them the benefit of getting out of PMI insurance, having the mortgage insurance. Could you tag a little bit on what is mortgage insurance? Why do I need it? And when do I break out of having that payment?
Sure. Well, mortgage insurance is insurance that you pay if you don't have 20% for a conventional loan. So what does that mean is the government gets all of that money from all the different companies that are providing mortgage insurance, basically to cover other people who, if they foreclose, they use that money to pay off their loan, to help protect the government. So it has no benefit to you. There's no insurance to you, the consumer. It insures the government, actually Fannie Mae and Freddie Mac, from their different loans. So it's really important to get rid of that mortgage insurance as soon as you can. If you have an FHA mortgage, you will always have mortgage insurance unless you refinance into a conventional loan. So it's very important because it can add a lot of money towards your payment every month.
Yeah, and seeing your people that qualify with you, Dan, like what is a normal mortgage insurance that you see on a monthly basis?
I mean, it depends on how big the loan is. So it can go anywhere from, sometimes if you have good credit and you only want to put 10% down on a $300,000 property, it might be $50 a month. Now, I don't know about you, Cousteau, but if I go out to eat with my wife, one meal is going to cost about $50.
Yeah.
So $50 now is not as much as it was back then. So $50 might be like, okay, you know what? I might want to save that 10% and only put 10% down now. And then my home will get more in value later. And then I can refinance and get rid of that $50 a month.
Yeah, exactly. And I think I've seen it in some scenarios as well, where it could be 1 to 150 a month. And at your 20%, that's where you really hit the mark of getting rid of that and actually being able to pay more monthly for your actual principal.
Yep. And so number 7 is fund and get your keys. So this is the best part, right? So this is where everybody's happy. You see everybody with the big key sign. I got the house sign, right? This is our favorite part, Cousteau, right?
Yeah, this is really our favorite part. And we, knowing the industry now, we can never actually celebrate until a couple days after this part, but this is really the part where Georgia is like an attorney state. So everything gets closed with an attorney that's chosen at the front of the contract. And we actually go there all together, get your closing gift, and everything from here is closed out. And one of the main things, Dan, that I always mention on this part is I would always change the locks all over the house. I would put new locks, have a new system, and at that point it becomes yours. Now, Dan, from beginning to end to our final step here, step 7, how many days process is this in total? Like how long would this fully take?
For a normal conventional or FHA loan, I would say it takes anywhere from 14 to 21 days.
Wow, Dan, wow.
So within a month, you can get everything done. And I know a lot of people say, oh, buying a house is such a hard time. But you know what? I've rented homes before and it's a hard time too. You got to fill all those documents out. You got to pay for different credit reports. You got to pay for different security fees. But this is actually something that's going to be your home for a long time. And you don't have to worry about rising rents. So it's definitely worth buying a home versus renting a home.
I would also like to add on to that, renting and the buying. People that are renting, they're currently paying 100% interest. So even if you're, buying a home right now, you would get a 94% monthly discount on your home.
Oh, I never thought of it that way. Yeah, that's a good that's a good point. You're 100% interest right there. And if you get a 6% interest rate, you're at 94%. So yeah.
Saving, yep, monthly.
So some of the top questions first-time home buyers wish they would have asked. So number one, what is a mortgage? A mortgage is a legal agreement between you and the lender, which pledges your home as security for the loan. So like I said before, if you don't pay the loan, you lose the house. The next one, what financing options are available? Conventional, FHA, VA. So VA is veterans. USDA, that's for the rural areas. And renovation or new construction loans.
Okay, and Dan, for this slide here, so let's say I'm an individual that doesn't have a lot of savings saved up. Let's say, for example, I've saved, I had a home buying process and I've saved 4,000 to 5,000. And I know it's a hefty process on actually getting a down payment and everything. So do you have any down payment assistance programs that I could use? And how would that work into this section here and the differences?
So we definitely have some down payment assistance programs. There are a couple of programs out there that are very strong that will help you. Even they have no income limit. So even if you make $1 million a year, they won't stop you from getting down payment assistance. And there's also low credit score options as well. So you could go down to a 580 and still get down payment assistance. Now, people think that you have to put 20% down. That's not true. With a conventional, you only have to put 3% down. FHA, you only have to put 3.5% down. VA and USDA, you could put 0% down.
Yeah.
And then renovation loan, you could put 3.5% down or 3% down, and you can renovate a property from being this junky $200,000 property to a $600,000 property.
Yeah, definitely. And Dan, I'm seeing, conventional FHA, USDA, and all of these financing options are great. But what are the differences? Like, what does this truly mean to me as a consumer, as someone, what do I want to aim for? What are my, benefits of choosing one of these?
I would say the most important thing is to talk to a lender so they can explain these things to you, because it really needs to be suited right for you, because the government has changed this process a lot. So before it used to be, hey, you need to have a 740 credit score and put 20% down, and then you'll get the best rate possible. But they actually changed that. And in May 1st, there's a thing called LLPA that is changing all of that. So actually the buckets go down up to 780. So there's different programs out there. So talk to a lender, let them talk to you, talk to me, and I'll sit you down and I'll explain everything for you and what the tailor-made the process for you.
Perfect, Dan.
So like I said, we do 200 different lenders. So self-employed, different people, if you're tax ID, if you're 1099 worker, if you are Uber driver, plus you do DoorDash, plus you do something else, there's all these different programs out there for you. And then here's understanding a rate quote. We can get into it more in later sections, but I just want to talk about what a pre-qualification versus a pre-approval and what the difference is.
Yep.
Pre-qualification is there's no paperwork necessary. So you fill out an application with me and I say, hey, based on your application and based on your credit, this is what you qualify for. Pre-approval, you give me all of your documents that I ask for, you know, your W-2s, your driver's license, your bank statements, and then we get the underwriter to look at everything, and then they actually see everything and they pre-approve you. That's what we talked about for a to be determined loan. So you already are underwritten fully, and all we need is the property to be approved.
Yeah, and from my standpoint as well, we always want to have a pre-approval, because if you actually send in all your documents to Dan, we could leverage the fact that I could tell the seller's agent, hey, reach out to Dan. Dan has all of my client's information. He'll be able to tell you my client is good to go based on all of his tax returns, everything he's seen, so that you could actually get accepted. You never want a seller's agent to call your loan officer and for your loan officer to say, oh no, I haven't seen any of his paperwork. That's just a pre-qualification. You know, you never want that scenario. You want the lender to be confident in your file and get that seller agent to talk to the seller.
Exactly. So what's a credit score and how do lenders use them? So a credit score is a number they actually put on your credit history. So it ranges anywhere from 300 to 850. So when people say, hey, you know, I have an 860 score, I know they're lying. So don't say that, you know, don't think that. The highest score that I've ever seen in my 12 years is like an 819. Because what they do is they get 3 scores and they use the middle of the score. They don't average it out. So they take the middle. So if you have 800, 801, and then 820, they're just going to say that you're 801.
Okay.
And then higher risk loans may have higher interest rate than lower risk loans. So the lower your credit score, the higher your interest rate is going to be. And that's because you are a riskier person. It's just like, you know, I wouldn't want to lend, you know, $1,000 to Cousteau if he hasn't paid back 3 other people that I know, right? So here's a chart of how you can improve your credit score. They look at your payment history. They look at the different balances on your credit cards. So you guys out there might have a credit card that has a balance of $500, but you only have a credit limit of $600. Then your credit score is actually going to go lower and lower, even though you pay it off every month. So what you want to do is you only want to have about 30% on that credit card. So if you have $1,000 credit card limit, you want to keep it to 300. And if you say, hey, you know what, Dan, I need more than that 300 because I buy my gas and I buy my groceries every month, then you know what, consider getting a second credit card. It'll take your credit lower for a little bit, but overall it'll improve your credit.
Definitely, Dan. And out of most of your applications that you get nowadays, you know, what are you mainly seeing that really affects people's credit? Is it usually like, you know, the credit card limits that they have that using, or car payments, or what really tags people on their, you know, debt to income and being able to qualify?
The credit limit is usually the biggest thing, because I have people who say, hey, Dan, I pay my credit cards every month, but my score is going down and down. So they don't realize that actually there's a game that you have to play to get your score better. So that's kind of how you have to think about it, as a game where you have to do a certain thing to actually get your score higher and higher and higher.
And what would you advise me to do, Dan? You know, if you didn't know me and I need to work on my credit a little bit, what would be your best advice getting to where I need to be, and what should I aim for as a credit number?
So some people think that you have to pay off everything. You don't need to pay off everything. But you only have to be up to about 30%. So the biggest advice is, okay, Dan, I'm on a limit, and you know, I've got my credit cards, they're kind of out of control. Well, you might want to just look at everyone, examine them, and try to limit them down, all of them.
Mm.
So instead of just saying, hey, I'm gonna pay this one off this month, and then I'm gonna pay off this second month, the other card off, what you wanna do is you just wanna reduce both those payments off at the same time.
Yep, perfect.
So how can you find your credit report? If you don't wanna pay any money and you wanna get your credit report, go to annualcreditreport.com. They have to give you, by law, they have to give you one credit report a year.
Mm.
So they won't actually give you a score though. It'll just say everything on your credit.
Okay.
But if you want to get some sort of a score, you can go to Credit Karma, you could go to your credit cards, credit journey or whatever. And you can actually get a score. That score doesn't mean it's going to be correct score. It's going to be, but it might be in the ballpark. So you might want to do that.
And how far back does it look on your credit, Dan? Like for your score, like let's say I had something that affected me, 3 to 5 years ago, is that something that I would benefit from or that it's further along in my past, or how does that have an effect?
So credit reports go up to 7 years.
Mm. Okay.
So it'll go back pretty far, but not that far. So if you have a bankruptcy 10 years ago, you're good. It won't state that you have a bankruptcy.
Okay, perfect.
And then how do I choose the best loan program for me? The best way is just really just talk to a lender. Talk to a lender so they can find out what program is the best for you. And then people talk about locking in the interest rate. So what does that mean? Locking in the interest rate guarantees that you'll get that interest rate for the duration of that lock period. So if you have a 30-day lock, so let's say I like the interest rates today, and at 6%, you go, okay, I want to lock it in today, Dan. I say, okay, lock it in, and then you have that 30-day window to have that. But the thing is, usually you should have a property already in hand, because if you don't have a property in hand, it might take longer than 30 days for you and Custo to get a property. Custo, how long does it usually take from when a person goes out with you to find a property that they like and will get accepted?
So usually it depends, on people's circumstances, what they're really looking for. I've had people I've shown 50 homes to didn't send really too many offers, but I've also had some people I've shown 4 homes and we actually close on one of them. So as long as we find the one that actually feels like a home, that you actually love, absolutely, that's where we're actually sending an offer. Sometimes it could take, a couple of days, it could take a month or so as well. It really depends on the scenario and the circumstances behind why you're getting it. Now, I did have a specific question about this one, Dan, as well. Let's say, I did find my property, but we've been talking a little bit about terminating. So let's say you did lock in my rate, or even if I did proceed to buy it as well, what if the interest rates go lower than what we locked in at, but I'm still buying? Is it possible I could switch it up at all, or how does the lock-in truly mean?
So, like I said, we work with over 200 different lenders. So what we can do is, even after a little bit, we can find a different lender with a lower rate for you and try to get that locked in there. So we don't try to make a habit of it, but once you're locked in, it doesn't always lock you in forever.
Mhm.
And then there's a thing called discount points. So what are discount points? So people say, okay, I'm gonna buy the interest rate down. So Kusta, have you ever heard of people saying that?
Yes, I've heard a lot of that, and I've also seen loan officers include that into their actual analysis, because a lot of people just look at the interest rate and base off that, not their cash to close.
Exactly. So discount points are fees paid directly to the lender at closing in exchange for a reduced interest rate. So they call it buying the rate down. So for example, say if I'm going to give you a 6.5 interest rate, But you say, Dan, I want to make it down to a 6%. And I say, okay, well, you have to pay, let's say, 1% of the loan amount. So on that $300,000 loan, that will be an extra $3,000 to pay that half point down.
Half a
So-
point, right? Half a point.
But it just depends on the day and it depends on the market. So
Mhm.
the next day, you pay the same $3,000 and you might only get a quarter of a point down. So it really depends on the market that day. So discount point doesn't necessarily mean that there's a fixed amount that will take it down.
Yeah, and Dan, we do have a quick question in the chat box. If you could quickly look at it. I think it's more so a question on your end, about card usage and the bank, what the bank would look at. Do you see it there?
Yeah. So Michelle asked, what if I recently bought my cards down to 10% usage? When applying for a loan, would banks hold in consideration that credit usage was recently over 30%? So they would consider that it was recently over 30%. So it depends on month to month. So say if you have that 10% usage, the first month, then your credit score will get a little bit better. The next month, your credit score will get better. The next month will get better and better. So your credit score will keep on rising. But they don't necessarily think of, okay, well, this person's used more than 30%, and now they're 10%. They say, okay, well, they're using 10% this month, so we're going to raise their credit. So that's how the game is played.
Yep. Perfect. And Michelle, let us know if we did answer that correct, good, or if you have a follow-up question on Dan's answer as well. We could go as in-depth as everyone needs to be. All right, keep going, Dan, go ahead.
All right, so what is loan to value? So loan to value is your loan amount divided by the value of the property. So for example, you have a $200,000 property and you have a $100,000 loan amount, then that means you have a 50% loan to value. So loan to value, people, like I said, you can put 0% down, then you would have 100% loan to value. Or if you put a 3% down, you can have a 97% loan to value.
Mhm.
So loan to value also helps with your interest rate. Sometimes, not all the time, you put more down payment, you can have a better interest rate. So it's important for you to talk to a lender to examine that. What's included in your monthly mortgage payment? So your principal and interest, so that's the mortgage amount. Then your property taxes, your homeowner's insurance, and then the mortgage insurance. So a lot of people shop different lenders. It's really important to shop different homeowners insurance as well, because not every homeowner's insurance is the same. And also you got to think about it, like I just had a leak in my house and it took forever to get the money back. So you might want to put that in consideration too, about claims and different things like that. So if you had a car claim, you might understand that, sometimes it takes forever to get your money back. Kusta, have you ever seen any claims before?
Yeah, I've seen some claims also on roofs as well. A lot of roofers actually put on a new roof and everything, but then they're still waiting even after that to actually get their paychecks from the insurance.
Yeah, so sometimes it just takes forever. And then property taxes in Gwinnett County, actually, property taxes this year have gone up 20%. So if your property tax was $5,000, think about now you're paying $7,000. So that's an extra couple $100 per payment that you're putting in. So property taxes are really important. So if you go up to, let's say, Barrow County, you're going to pay a lot less. Or Forsyth County, you're going to pay a lot less than Gwinnett County or Fulton County. So property taxes are always important. And if you are over a certain age, you can get discount on your property taxes. So you don't have to pay school tax. Kuso, tell me about homeowners exemption.
Yeah, so the homeowner's exemption could be used for everyone that wants to have a little bit more of a write-off on their taxes every single year. So when you actually show the government you're using this home as to living there, you have a savings on your taxes every single year that you could use to, for other things in life. And I also did have a quick follow-up question, Dan, on this. So if I was to give you a monthly payment, let's say our monthly is $2,000 a month. Everyone looks at, from a third person standpoint, we have this house is 300,000 and our monthly payment is 2,000. And that's where a lot of people just stop there. Could you dig into a little bit more how that 2,000 payment would be split, just as an example, and how much actually goes to paying off my $300,000 house?
Sure. So if you have a $2,000 monthly payment, actually only a part of it might be principal and interest. So for example, let's just say 1,500. And then the rest, property taxes and homeowners insurance and mortgage insurance, is that extra 500. So it's always more important to put a little bit more money into your principal. That way you can pay off your loan quicker. So if you pay one more mortgage payment a year, you can save 7 years of mortgage payments in the future. Because in the beginning, you always pay more interest than principal. So if you add more money into your principal in the beginning, in the end, you'll pay less interest.
Wow, Dan, and we'll emphasize that point really quick for everybody. So you're telling me, Dan, if I have this $300,000 house and my monthly payments are $2,000, and I have let's say a 30-year mortgage, if I just pay an extra $2,000 for 1 year, my 30 years will be finished in 23. I'll save 7 years of payments on a monthly basis.
Yeah, that's correct. So you'll save 7 years of payments. So that's 7 years of more money in your pocket. So if you multiply 7 times 300 divided by 3, the payments, but $2,000 a month, 24,000. That's a lot of money. So you're saving over 100,000.
Yeah.
In payments. So
1,000 in savings. Yeah.
So it's very important to put more money into your principal.
Perfect.
So we talked about mortgage insurance before, but basically it protects the lender if you fail to pay your mortgage. So it has nothing to do with you. It protects the lender and it protects the government from all the defaulted loans. So what are closing costs? Kusto, can you tell me about closing costs?
Yeah, so closing costs is like a lot of lender fees, attorney fees, who pays taxes, HOA costs, all of those different things. Now, this is always negotiable. So in the state of Georgia, when I was taking my real estate class, they taught us sellers are the ones that are going to pay the agents, both of the commissions. Buyers never pay. But on the other hand, there's a trade-off. So usually the buyers would be responsible for the closing costs, the fees, the taxes, the mortgage insurance, all those other things. And this could range, Dan, if I'm correct, it could be between 2 to 3% of your actual loan amount or the actual closing amount. What do you usually see on that amount percentage wise?
Yeah, about 2 to 3%. So it really depends on what what the taxes and what the fees are going to be. And everybody has to remember that there's loan officer fees, so lender fees, and then there's title fees, the attorney fees, and then there's the government, and then there's the insurance that you are paying, the escrows. So there are some fees that can be negotiated with the lender, with the title attorney, and also with the insurance. Now, with the government, you can't negotiate. That's the government. So.
Yeah, and to quickly bring you in on my world, Dan, on parts like this, when we're actually in our due diligence period doing our inspection, we are negotiating for closing costs to actually be added on. And Dan, you might always see, why is it always closing costs, being covered? And my true answer to that, Dan, is people don't like to put the pricing down, especially agents, because even if it's a $5,000 more, that seller's agent is thinking they're going to get an extra little commission, on the back end. So they're always pushing for the closing costs to actually go through. So that's, the hidden fees that the buyers have to do. That's what we negotiate for on our inspections. What's wrong with the house?
See, there's always something, right? There's always always a little bit of something. So yeah, like I said, also shop for attorneys, shop for insurance as well.
Yeah.
So what happens when I apply for a loan? The lender works to verify all the information, the appraisal, the title work, see if there's any issues, and then we submit it to underwriting and see if it gets approved.
Okay, and Dan, would you quickly tag along on what is underwriting? I thought I'm working with you, Dan. Like, who are these people? Like, what's going on?
So the underwriting people actually, they check everything. So they go through the numbers, every minute number they go through, because I do it on a initial level. They go behind, they talk to your employer, they call them up, they make sure that you're still employed, they make sure that you're getting the amount that you say you are. So they're going in depth on what you actually applied for. So let's say that you work at McDonald's, they're going to call McDonald's headquarters and make sure you earn that amount that you said you're going to earn. Instead of me, I just see a paycheck, pay stub, but you know what? You might have, fraudulently just made it on your computer, and I can't tell the difference. But my underwriter is going to go back and he's going to check, he's going to call everybody, he's going to do all the different checks that they need to make sure that everything is right.
Yeah, perfect, Dan. Okay.
And what responsibilities do I have during the lending process? The responsibilities that you all have is to tell the truth, as far as you know. Because if you lied during the process, it not only hurts me, it hurts you as well. So even if it's something bad, just tell me and we'll try to find a way around it. Like let's say you lost your job and you say, hey, Dan, I'm still working there. We call your job and they said that guy doesn't work here anymore. We can try to figure a way out to once you get another job, to continue the process. And I can talk to Cousteau, and Cousteau can actually extend the contract date maybe. There's different things that we can do to help with you, but don't lie. Once you lie, then we're in big trouble.
Yeah, and then I also want to stress a lot on this point as well, that it's very important to actually talk and communicate with you on what my expenses are going to be if I'm expending something that we haven't already discussed. So for example, I've heard of this other story in my office where my client, someone was having a closing, another fellow agent, and their client rented out a Porsche to actually drive to the closing. And that expense on his own dinged their credit, dinged their expenses. And in fact, they could not close and lost their earnest money, all just because they wanted to drive the Porsche to closing. So it's really important to talk with Dan, to tell him your plan, and he'll be able to support your decisions in this process.
And if you're going to buy that Porsche, wait a month at least to buy that Porsche. Because they're gonna, even after closing, they keep looking at your credit for X amount of days. So if you buy that Porsche all of a sudden, they say, hey, that's an extra $1,000 a month payment, that's really gonna hurt you.
Yeah. Perfect, Dan.
So here are some of the 10 commandments. What you shouldn't do. Don't quit or change your job or become self-employed. Don't buy any Porsches. Don't buy furniture yet. Wait to buy your furniture. Don't let accounts fall behind or credit cards become excessive. And don't change bank accounts or transfer back and forth between accounts unless you let me know. Kuso, you want to cover 6 to 10?
Yeah, let's do it. Let's do it. Just a second here. Okay. So you should not stop paying your rent or your current mortgage, especially if you're actually selling your property. If you are selling, you want to have everything covered, and the buyer of your actual property will cover everything for closing for you. Now, the number 7, don't inquire anything on your credit. Make sure that your credit stays the best that it can. The most points and everything that you could collect in that time, keep it. Do not co-sign on any loans, even if it's for the closest family member that needs it today to be done. Wait until after closing at least 1 month, then you could actually co-sign and help others. And also don't make any large deposits, without checking with the loan officer. This could actually affect you, on your process on where that money came from, having the explanation letters they actually have to send in. And then do not omit any debts or liabilities. Make sure everything is, overall have the communication with the loan officer. Make sure they know what's going on, any big deposits, anything. Because we've seen before, Dan, as well, with some clients, they get a gift of money, maybe from a parent or a family member, and that is used as their down payment, but they also need an explanation letter on where they got that money from.
Yeah, and sometimes they need to show the paper trail of where they got that money from. So instead of getting that money transferred to you first, wait, tell me and then I can tell you the best way to transfer that money.
Yeah, perfect.
Kusto, you could cover this one. Why should I do a walkthrough? What should I look for?
So these are the biggest reasons why you should do a walkthrough. And we should cover every single floor, every corner of the house and everything. And that this is the time frame that we're actually using if we actually negotiated anything with the seller, if we got a new roof, if we got anything, to go out and check and make sure any holes in the wall are fixed and everything. Now, the most important thing here, Dan, is that we actually have a documentation on the beginning of our contract that says seller's disclosure. And what goes on here is what the seller is actually leaving with the home. So we can see here a refrigerator, or an oven is being left. This is also a chance to verify that. And something that actually went in my office then at a team meeting, there was a client that did not do a final walkthrough. And what actually happened is someone broke a window and stole things out of the house, like the refrigerator, TVs and stuff. And once that buyer signed without that final walkthrough, it becomes the buyer's duty. So, you don't want a bursted pipe in the middle of your living room on your closing day after you've signed, so this is a great chance, to first of all, have protection in the contract that the seller has to put it back into what you agreed on.
Yeah, so always do the walkthrough. It's only going to take, usually, how long does it take, Gusto?
It takes as long as it does to drive there, and then 10 minutes.
Yeah, 10 minutes. And you know what? You can do it the day before closing. You can do it a couple hours before closing. You can do it a week before closing. But make sure that when the seller promises something, they actually do it.
Yeah, exactly.
So what can I expect happening on closing day? So I would recommend that you go a couple days before closing, wire the money. And one of the biggest things are wire fraud. So what you want to do is you want to get that wire instructions and call the attorney and ask them, hey, I got the wire instructions. Are these your numbers? Is this your routing number? Is this your bank account number? And double check on those, because you don't want to lose funds. I've seen some people lose hundreds of thousands of dollars because they got caught in wire fraud. So you don't want to be that person.
Yeah, exactly, Dan. And it could be, fake emails, fake stuff that people are sending out. So just always verify with the team. Everyone is working together to make this happen.
And you're going to sign a lot of papers. So get ready. If you have arthritis or if you have whatever, you have a long signature. Maybe you want to shorten it a little bit, because there could be over 100 pages that you sign off on. So don't worry about the time. You have all day to be there if you want to read every document. But most of the time the documents say if you don't pay, they're going to take your house. So you can read it, but the attorney is going to explain it all for you. So if you want to read every document, you can, but the attorney is going to explain everything.
Yeah.
And then grab the keys and go to your new home. So Husto, what else besides the keys should they know about the home? Like, what would you ask the seller? What would you ask the listing agent?
So the main things, Dan, that we always look for is to have all the utilities listed so that my client could actually connect to the water, connect to the internet, start getting everything set up. We're also looking for garage passes. Maybe they have a mailbox key, certain things. And this is also a very great moment if you're the type of person that wants the actual seller's information. You could actually get their information. The agents are no longer within the deal. So then you could actually talk with the seller. You could ask what's the best parts about the home, what did they like, and any improvements that you want to know about as well with the seller.
And you know what? Sometimes people become friends that way. So I've seen it a lot, and like, hey, this guy is a big UGA fan, and so am I. And you connect. And a lot of people, when they are selling their homes, they actually care about their homes. So they wanted to go to a good person, and they want to kind of see their home also, what you're going to do with it. They want to make sure that, I've raised 3 kids in that home. I don't want to make sure you don't demolish the property and make it something else, so it's also a good time just to build relationships that way.
Yep.
What steps do I need to take to secure a loan? You need the right documentation. So photo ID, social security card, last 2 years of taxes, last 2 years of W-2 or 1099, your most recent bank statements. If you're a veteran, your DD-214 and your certificate of eligibility, COE. You need the purchase contract, your pay stubs. So what else is in that purchase contract? Is it just one paper? Like, what is it?
Yeah, so a lot of it, what's in the purchase contract is, giving the contingency timelines, how we're protecting ourselves if we did terminate. And it's usually just telling the seller how we're getting the deal financed, what our plan is, are we veterans, all of that kind of stuff. And it also, the main document, Dan, that is always attached here usually is a seller's disclosure. That's what shows what's staying in the property, but also what the seller knows about the home while they've been living there. So if I know, Dan, 7 years ago, my pipe bursted, in my living room and I repaired it, or my new roof is on from 2 years, that is my chance to put everything. That is also another document we get signed.
All right. Renting versus owning. So renting versus owning. In 10 years ago, a person bought a house for $250,000, and now it's worth $700,000. That's $450,000 in equity. And if you still had $450,000 in equity and you still had a $250,000 home, you can actually get another loan and take a majority of that 450 out and do something else if you want to put it in the stock market, or if you want to buy more property. So this just gives you a little chart of how much rent that you're paying for 1 year versus 10 years. That's the difference. You could have spent 180 or you could have earned 450.
Yeah. And this is huge, Dan. This is a very huge slide that I would always save as well, especially having the rent versus own option. You really want to go to the owner route, because let's say even if you're at 2,000, monthly payment, by the end of the year, you've spent that 24,000 in the air, but Dan, it's really good that we focus on 10 years later, 120,000 that we've spent in the home, it stays with us. And we could always have that, for our future.
Yeah, and when you sell your home, you'll get all that money back and plus some. And also save money on your taxes yearly. So those are some things to think about. You gotta think about taxes, you gotta think about all the different things that come with the home, that you can paint the walls if you want to. You can, you know, change the house layout if you want to. If you want to make the home bigger, you can, you know, get rid of a wall, you know. So there's a lot of things you can do with the home versus an apartment or a rental that you can't do, you know, without permission. So owning a home is always the most important thing. I guess, you know, people always say that's the American dream.
Yeah.
So I know people have written questions in the chat. Does anybody have any more questions that you would like answered by me or Kusto?
Yeah, so Dan, I do have a couple of questions just to break the ice here as well. I want to give you some questions and then we'll wait to see if anyone tags anything. So I want to ask you, you know, from someone that wants, you know, get an application written up, actually qualify for the loan, what do you see most of the time that affects people, you know, in that loan process of, oh, well, I'm not ready yet, you know, but then I need to get ready. What is the biggest effect?
I think the biggest thing is down payment, because they think they can't afford the home because I don't have enough money. But the thing is, there are down payment assistance programs, or you can have lower down payment and you can still get a home. So because Kusto can always work things that are called seller concessions. So let's say you do have down payment, but you don't have closing cost money. Kusto can negotiate and get closing cost money for you. So even if you're a little short, they can cover that.
Okay, perfect, Dan. Now, another thing as well, like let's say I don't have plans of purchasing a home now, but I want to be ready and make sure I'm ready in 6 months. What should be my concentrations? What should I really focus on for these 6 months until I do my application?
Okay, work on your credit. I would say work on your credit, make sure it's the best possible. See if you have enough down payment money. And then a couple months before you actually even go out, sometimes ask Kusto to send you some properties that they can look at. And Kusto can put you on a list where you can look at the properties. And you know what? Even if you think, hey, you know what, I need to wait another 3 months, you might say, hey, this property is perfect for me. I want to get that property before I miss it. I love the neighborhood. I love the school system. I need to go there. So it's really important for you to just look at what's out there. You know, if you're dating, you know, you try to see everything that's out there. You know, you don't just fall in love with the first person. So
Yeah.
and yeah, it's really important just to know the market.
Okay, perfect, Dan, perfect. And overall, you know, with the USDA loans, I know that I could use that to get 100% finance, even though I'm not a veteran per se. That is like a different kind of loan. Where can I use that, you know, in our areas? Is it anywhere, or is it a certain area that they give that 100% down payment?
So 100% down payment. So we can look at, there's actually, the government gives you a chart and you can put the address in that chart and you can see if it's eligible. So right here, we can see if a place is eligible. So you give me an address and I can see, okay, this place is perfect for the USDA loan and you could get 100%.
Okay, perfect, Dan. Yep. All right, man. Well, those are all my questions, man. You got anything for me specifically, or I think everyone else is good so far too.
Yeah, I mean, Kusto, like what can I do to prepare myself for going out with you? What should I do before I go out with you?
Yeah, so what you should really do, man, is we need to get your criteria locked in. So you need to really think on why you need the certain amount of bedrooms, what you need in a home, and what you really want as well. Do you want a fenced-in backyard? So that way I could get everything started on the back end and you know what to prepare for. Now, I want to give everyone also that me and Dan are a team aspect. So it's always a loan officer and a realtor working together with the client to actually get them to the closing table. Now, everything needs to be aligned. We all need to keep communication high. And that's really it, Dan, just high communication, meetings all the time, and, you know, really getting together as a team to make this happen.
So speaking of communication, Michelle asked, when is the next class?
The next class. So Michelle, we are having this class every quarter of the year. So the next class should be this summer around July timeframe. And I'll make sure to update you about this as well. But also, Michelle, you know, since you're here as well, I want to mention, and I think Dan is also okay with this. You could always call or text us anytime with questions. We're always here to help. So even, you know, a month from now or a couple weeks, even tomorrow, you could send us a text. And we're always here, you know, for any question or advice.
Kuso, another question I had is, what makes Keller Williams different, I guess, from all the other people? Is it the company that, or should I, you know, like why choose you?
Yeah, so Keller Williams is the #1 company, okay, but it's really what I want to dig in more in depth, Dan, is that when you take the #2 to #5 companies after Keller Williams, if you put them all together, all of their numbers, their sales, everything, they are still not even halfway to what Keller Williams is, our numbers. And the reason why behind that, Dan, is because of the educational systems that Keller Williams teaches, the systems, the goals, the way of thinking, everything is different than the agent. And another thing too, Dan, is that the way that I operate my business is I'm never going off the basis of thinking about myself and my paycheck. That is all the way at the ending of everything. I'm more so thinking, how can I assist you best? And how do I be the best agent for you? So that way you would refer me to some of your friends and everyone else around you as well. So I'm mainly working for you, your circumstances, you know, how to get there. And also, you know, that is why I'm never, you know, pushy or anything. It's because it's all about your process, your goals.
Well,
yeah.
Thank you guys for all of this. If you have any questions, please feel free to reach me. Please feel free to reach Kusto, and we can try to give you the best advice possible. But our biggest concern is that you get a home and you can live the American dream. Even if you don't use us, we really care for you to make sure that you get a home and you can raise your family and you can get to the next level and grow with generational wealth. So.
Yep, that's the goal. That's the goal, Dan. Grow in generational wealth and help many more around us as well. So, Dan, if you could please drop in your phone number here as well on the chat box if anyone wants it, and then I'm also going to drop in the Instagram as well. So if you guys would like to follow us on there or contact us anytime, we're always here to help out. And the next class is going to be this July. We're also going to have some in person and also more on Zoom as well to help everybody. Thanks so much for your time, Dan. I really appreciate it.
Thank you, guys. You guys have a good weekend. Everybody have fun out there.
All right. Thanks a lot, Dan. I'll see you soon, man.
All right. See you soon.
All right, brother. Bye.